Crypto snipers, how are you? Bitcoin and general crypto update. And there's a second theme here that I want to highlight here, and that's the death of Solana in terms of its chain, its outages and performance, and who's been benefiting in a relative way. Remember, crypto as a whole is in a contractionary state at the moment. When will it reverse? Bitcoin will probably lead. Bitcoin dominance has shown that Bitcoin is currently the one that is going down least, generally, or is benefiting from a lot of deflation we predicted this a long time ago when we first pointed out the falling wedge maxis will be at chief strut over other tokens. But who's actually, even in a bearish environment, shown relative strength, which is an early indicator flag of who you should want to be in at the point there is eventually a turn. So at some point we suspect we will be getting a turn. How far, how deep, we don't know. There's still an intense possibility that the market goes full fear and does nasty spill. But there is also a possibility that Fed pivots, remember the macro and everything, could come very, very quickly. Things could deteriorate really fast. So then they cease their hawkishness and then they move around into, well, maybe we were doing too much too soon. Now's a good time to pause. And then the music changes, the risk on assets come back into their own. Also, another thing I want to comment on, so we're going to discuss why I feel Binance token and ADA are going to be benefiting from Solana's relative underperformance even inside a spilling market. So it's a real spiller relative to its peers who are going down. So there's an interesting thing of rotation in the alts. A key point, most of what we do on cryptos is always in the top 10 usually, and certainly within the top 25. We are not micro token pumpers that later you find out held a lot of those tokens and dumped them on. And there's a lot of YouTube channels that have been doing this and been caught. I'm seeing a lot of new names recently being added to that list. Beware the small cap pumper guys. Beware. Okay, anyway, back to Bitcoin. Let's just go deal with Bitcoin first, because there's a couple of themes that I want to mine. Bitcoin generally, what I think happens next, short term. Medium term, we're going to have to wait on the Fed and see what's going on there. And I think for now, they're going to have to continue with their turning the screw. But we'll have to see when the economy breaks. Then there's the rotation inside the chain, ADA, Solana, BNB. But also something else that happened, and I'm not responding to it immediately. I always like to give myself a bit of time to think about it. People rush out and do a YouTube the minute somebody says something. But JP Morgan put Bitcoin as undervalued relative to other risk-on assets now. So what you're starting to see is, at the moment, crypto has been a high beta version of the tech NASDAQ. And when the tech NASDAQ goes down, the crypto market cap has gone down even by a greater percentage. What might start to change, and we need to watch for that moment, that shoe that drops, is when next time the tech market goes down a certain percent, how much does Bitcoin? Is it going the same or less in the future? At the moment, it's gone the same or more. And a key pivot will be when you have a sustained period. I wouldn't just get excited about 5 minutes, an hour, or one day. But if over the course of a week, you've had Bitcoin, say, go down 3% on a 7% shrinking NASDAQ, that is actually also positive. Talking about things going down and how it's positive, because we start looking during the periods of weakness where the relative strength is for the next bull phase. And this is really powerful. It's kind of like putting soldiers under deep stress and obstacle courses that most of them can't finish or do, etc., etc. And it's all just suffrage and light. And you see who gets reasonably far and achieves something, even when thrown a challenge too big, versus those that just fold and don't even get started. So this is an example of mental strength, even though, who persevered, who got reasonably far, who in a impossible situation still achieved something. In essence, that is a sign of greater strength. And when the good times roll, and when they have a bit more support, and when there's a little bit more on their side, they will actually get the eventual outcome. That is taking a sort of military concept into crypto. So anyway, let's just talk about Bitcoin and get started. But those are the 3-4 areas I'm going to take you. Bitcoin, what's short term next, chain, the death of Solana relative to ADA and BNB, and crypto, particularly Bitcoin, but also we can look at total and total 2 relative to NASDAQ and other basic, other possible cross comparisons as well for how it's underperformed so far, and when and how, and what levels need to hold for that to change and for it to start to be relative overperformance, because that will be the seeds of the next bull. You have to look for the seeds of the next bull, even when there's still a chance there's going to be further capitulations. So this was a bear sell, and I just want to highlight key levels here, 40 and 42K. And, a lot of people rushed out, you're so wrong, you were too arrogant here, but this was all part of a macro continuation when you broke out here. So, okay, there were 2 major numbers, 40 and 42, that we had identified, which included this potential neckline armpits over here, that we've warned hasn't been invalidated. That becomes invalidated at the 52, by the way, on that, which was also a flag. So we've had a lot of flagging out of Bitcoin, flagging like this, and then sell-off. This in itself was a bigger flag, and you're going to see why that's relevant, because in essence, the rally, everyone was like, yay, you see, you're too bearish, boom, a rally, stopped in its tracks, brought back to the 29-30K. So we've put up with that a lot. Everybody telling us how wrong we are. We got it here for warning defense, and that we're just perma bears and whatever the case may be. There on that rally, here you were so wrong, there, and again there. So every rally, essentially, we get puke in our comment section, and that's just the nature of the game. In this particular instance, we had said that this particular fractal would go down, so we were inaccurate there for a short while before it came back, and we continued to say, well, you're probably going to run that basing ascending grind line, and it did happen, and as we did here. So you can see they're very similar type pieces of price behavior as you are leaning up against what we call a basing ascending grind line. To find out what that is, go to themarketsniper.com, learn, come and join us, see it implemented, see it discussed, get the phraseology, get all the language, and understand what it means far more than what you think you can. So many people, I'm picking up everything I need to know on YouTube for free. This is the miserly thinking. If you've learned anything, that's great. Imagine how much you could learn if you really invested. It's kind of like, do you really want to do this? How serious are you? Smoke enders, eventually people pay because they're serious about ending it. And if you've taken a wash and a major loss, maybe that's exactly where you are, because there will be a bull market. Don't be despairing. People are generally wrecked right now across the board. They've taken leveraged longs. They've been washed a number of times. They keep losing because they generally keep going long. So there would have been FOMO buying on the new high there as you went over there. There would have been FOMO buying here, and there would have been FOMO buying there. Each time they would have been washed out, usually because they don't understand money management, risk and stop losses, or they took a size loss and they've taken so many size losses that they've actually given up a substantial amount of their account. So if you are at that level, at least you're taking size losses and not getting wrecked. But every time you have conviction, you're probably wrong. And there's a lot more to come in this global world in terms of where we're being taken. Don't forget the Odyssey channel for Reset Sniper, where we talk about the World Economic Forum, and the traditional markets, where we cover things like the dollar, which has been a big part of this, that so many crypto stock to flow guys think it's all about Bitcoin and Bitcoin's on-chain analytics. That will play later once it's no longer flying into a headwind. These things can be significant and they can play a role. And most definitely when Bitcoin was a bubble into its own, it definitely did. But as you start to become a well-known and well-proliferated asset, it starts to become much more like, how are you comparing relative to other things? What's the outlook? And you start to get fundamental investment analysis concepts coming in. So you're different for a while, but once you're no longer a child, you end up having to go into the job market like all your peers. You end up having to make a living, paying rent, and having a mortgage, a wife, and 2.2 kids. So that's how it goes. Okay, so let's have a look at this. So this for me overall is still in the realm of potential flagging. And by the way, on any of these things that we call going forward, we're not claiming clairvoyance. We're not soothsayers. We are just applying a probability-based narrative. And that is continuation. Things continue until a clear-cut reversal or new force enters the game. At the moment, the dominant force is liquidity being sucked out of the system. Remember, it's not you setting the price of Bitcoin. You bought up here at 69 and hodled all the way. You are just a bag holder right now. You're not setting the price. The bid and the ask is being made by institutions generally who are under the cosh, whose bond portfolios are being killed. They've had the worst year since 1788. I saw stats there. So the yields aren't good enough. The capital values are collapsing. The great debt experiment is unraveling as far as I'm concerned. And they are having to find cash and they're having to liquidate. So you've got forced sellers potentially because their Tesla stock is underperforming so far this year. Their NASDAQ stock, all their portfolios are down. So when the juice gets sucked out of the system, the overall system is a lot drier and harder and meaner. And this is leaning now on the big holders of Bitcoin. So here we go. So there was the first full bull flag structure, and you ended up down there. Here was a much larger one because of the key levels of significance of 42 and 40k that we had identified. That was a possible neckline that is already in break. You then fall into the next key level. All these lines we've had on here well before Bitcoin came down here. This chart hasn't changed, guys. Go back and look at my YouTubes from 6 months ago. This chart hasn't changed. I've fattened this line up for this video, so because I'm going to be talking about it next and explaining why I feel we'll certainly run the 25. Certainly still means a high probability. It doesn't mean a guarantee, by the way. So understand also English and mathematics. You get mathematical English, you get legal English, legalese, and then you get just chat, passing on a point, talking. And when I talk, I'm saying it's my on balance of probabilities assessment. I'm not going to say that every time, but it's what's meant. So over here, big level. Okay, so you have a continuation structure for an extended time that you did have, and there it was. So now we're at another reasonably significant level. Where did this number come from? This number you'll see in purple is in and around, it's 30,300, and it's also on very close to the 30k. You see there's a dotted blue line, that's the 30k, and there's a 33. So there's a confluence of levels. Where did it come from? Note how again you go corner to corner on a flag. So for me, this downside is not very far away. Just like here, corner to corner. It's like a diagonal on a rectangle that is bent up. You go corner to corner and you slip out. You should be looking for fractals, low volatility. You saw a broadening structure, an attempt to go up there that got knocked back. Where did it get knocked back? At the key round number of 42k. Damn, you dip down, return move. If you've not already short on the dip down, you should nail the return move if you're lucky enough to get one. You actually got to pause on another attempt that reached for the 40k over there. And that was your last chance. You actually got the break, a return move, a second return move to the 42k, and then there's your spiller and thriller. That's where you make your money and you're off. You're no longer paying financing fees to exchanges for your short anymore. You're in and out. And I'm here to say to you that it is my express opinion that that event will come again. This is a much smaller flag and is coming sooner. So you're going to have a couple of instances where you might go. This was relatively quite momentous over there because you had a little bit of outburst of peak Fed, peak inflation, only for oil to go through $120. good luck with peak inflation when the oil price keeps going up, when you've divided the world in terms of its supply chain, and some of the biggest oil providers and gas providers, Britain and Europe. What's happened with the dollar strengthening is that inflation has been exported. The dollars that are normally going when the US consumer is going offshore to other nations to buy commodities. Instead of that, they're exporting the inflation now. As the dollar gets stronger, people are having to pay dollar-based prices on world commodities, and now they get more of the inflation than America, because the relatively strong, I'm not a dollar friend, calling that the dollar is going to dominate other fiats doesn't make me a dollar friend, but it's market view and perception. Smash the other fiats with the big stick, and that's essentially what's happening. So we are getting in here, and I think in and around here, it could stay below the line. I don't think so though, but you might get another. This was a very lengthy flag. It took a while to play out. People were really frustrated and bored. This one didn't. You had one serious leg down, one serious leg up, then you had your setup, and then you went. This one broke down into this level, churned. This was lengthy, literally since the beginning of 2022 till we were eventually proven accurate, where it was clearly breaking over here. You had a better part of 4 months of continuation. Why? Because you were setting up a very big move that was taking out the accumulation box, and this I've covered before. But if we go, let's just go get some more of the price behavior with the 2 days. And again, I've drawn this many times, usually in the TG Pink. And here you go. And what did we predict for you? That when you break, you will break the key accumulation area in the bull market. Remember, that was in the bull market. It was an accumulation area. You will break it with momentum to the downside. Smash. That was your trade on the short side. In the same way that was your trade on the short side. Those were your best recently. These were your longs and accumulates. These were your long and accumulates, both of which he said and got you long here on the falling wedge break. Still in the accumulation box. This was support with a bear flag coming down. Totally different dynamic. Now, what is this fat purple line that's just above the 30K line? Well, I might need to go even further to show you, and we'll get to that. But what else did we say before I go to the big fat purple line? When you sell off hard, how many times do I give this analogy? It's the horse that has a double jump to do. One of them has a water trap in it. It comes running with real momentum and it's got to carry, leap over double jump, and then whoosh, in the water, keep its momentum up and clear the other one on the other side of the water trap. That requires real momentum. After that, you slow down and you turn around and you breathe and you get ready again. And so what typically happens is you get a weak rally into what was support, now resistance, and that's exactly what's happened. This has gone from being your friend that was supporting you and was your bounce up key moments when you were coming down. Now that you've smashed through it, you're on the wrong side of that border. It is now resistance for downside. And this is a flag, guys. So you have exactly what we told you was going to happen. You broke with momentum. It was a downside break. You cleared the accumulation zeros. We said you'd also clear all these relative little lows here, right the way down to the extreme lows here of all of these levels. You did exactly that. You cleared and ran. All the technical stops were run. Everybody with the obvious technical stops was cleared the hell out. That's what happens with a momentum run. It's designed to do that. The money chases the liquidity and the fear, and those pending orders triggered lots of liquidations. Would have been high, not as high as they were earlier on because retail's have been squashed. More of, I suppose, the bigger players and institutions that would be thinking, damn, this is serious, and getting out, or had their long-standing orders. So now you've got a downside continuation pattern with a very clear-cut pole rallying into the zone we said was a key zone. And what happens there? The support, and this is not my theory, this is long-standing technical analysis. What was material, significant, regularly proven support, when it is run, becomes material, significant, and able for an extended period to be resistance. So we are not done with the bear side. So we said a couple of things we're going to discuss with you. It is my opinion, on balance of probabilities, we are not done with the bear side. In the same way, everyone who said, you're wrong again, and they'll say it again if we get a third impulse and we go a little bit higher. They'll be charging on and saying, you're wrong again, you always talk so confidently, you should be more humble before the markets, the guy says. And then you could be back down here. And it could even happen, who knows, and maybe not so high this time. It could extend quite a bit. This was 4 months of extension. People were calling us wrong for a long period. Even though it was going nowhere, every time it had a run, they quickly looked stupid. They called bull. And then eventually it's built. And it's waiting for the next bout of news. And the news doesn't get any better. Your World Economic Forum friends, the dollar price, the price of energies is killing Europe. Imagine what it's doing to Africa. Imagine what it's doing to Asia. These guys, the yen is collapsing. More and more of your money is being spent on fuels. So this is going to rally in here. So what about this line? Let's answer that question finally, because we've mentioned it enough times. Let's take you up to the weekly level. This, my dear friends, was the time we told you you can aggressively go leverage long and you will do well. The first cup, gold nugget, the rushed third impulse on this trade, which was small and tiny and over there. And it's even better on the euro, by the way. We had a spell of dollar counteracting there. Boom, boom, bosh. That is your funnel. That is your funnel. That is the bear flag target. Everyone says, he said it'll go to 12.5. No, I don't. I don't overrate bear flag targets. I'm just saying, if the bear flag performs, the implied target is 12.5. If the head and shoulders performs, the range would be in and around the 15. So both of those could fall. One of them could fall, or neither of them could fall. But the bias is downside, and we're looking at levels on the downside. But I can tell you that we paused and found support here for you at the 30K here, and that's the bottom of the range of the accumulation box that you've now broken. And the next major level is the 25. And that thick purple line was the geometric target generated by our HVF that gave you the first cup gold nugget run with its overperformance that would have got you out there. And actually, since then, Bitcoin's not been a great place, even though you've traded higher. A lot of churn, a chop, and a spin around and all of that. Is there a head and shoulders somewhere? Well, this as a head and shoulders would take you to below zero, and that's what we warned when I think it was Michael Burry or somebody posted a head and shoulders that couldn't be here. This one, he posted this one, and we were bulls here. He posted this, Michael Burry of The Big Short. We said, no, you're going up. And also that one would have brought you very close to zero. So you're having new possibilities. That doesn't mean probabilities. If JP Morgan are telling you to buy, it's probably because it's too soon and you're going to be a liquidity provider for the next short leg. I would treat them with suspicion. But they might be right in the long run, because they know that noobs don't know how to execute and won't know when the Fed pivot is coming, and they will have a very good idea because they are one of the same machine. So these are the low targets, but that 25, I think the next spill out of this flag level runs these two key levels of significance, and then you'll probably get some form of reaction again. That doesn't mean it's over. It doesn't mean it's over. It doesn't mean it isn't over. It just means trade through. So that means you could trade 24,000, for example, or 23,900 or 750, and then have a snapback, and then pootle around 24 and a halves and 25,900 and all of that. And that you will end up finding a continuation pattern, or, and it's possible, but we wait to see it because we continue to assume continuation, a reversal pattern. So how does good news come early for Bitcoin fans? You run both those levels. This turns into key secular support. Do not underestimate the significance of this line. That's why I fattened it up for this discussion. Why? Because it was a 2.5-year target generation. This is a log scale now, guys, so that you can see this properly. A 2.5-year continuation pattern target that hasn't been visited. So Bitcoin could support in that. There's also some other structures that I've mentioned quite a bit. So I'm going to just take a number of things. So that's on how will you bull that? Well, you could bull doing something like that. You rally back up to the 29 from the 25 and you form another small dip, only this time it's a bull flag or a falling wedge or anything else. And then that would be an early turn. Now, I'm not calling the early turn. I'm just giving you a number of scenarios that I'll be prepared to trade. There's your left shoulder, that would be your head, and that would be your right shoulder, and then you'd be the reversal trader for a move up like that. That would be a number of scenarios that would be non-cataclysmic. I don't think it's the end of the world if you trade 22, 23, even 21 on a wick spike, but it's all clustering around these two levels. And you have a complex bottoming structure. You might have a W bottom. You could have a lot of sexy little variations, and you could churn there for quite a while. I would expect there to be some resistance at 25. As I say, it will be run. If it is a break to the downside, I would expect the 25K to be run, but I would expect there to be a period of continuation or reversal to form. So that's the next level for me to the downside. And this is a small flag, so it also makes sense that you get a down leg, but it's not necessarily going to be as big a down leg as that was. It could be. I'm not saying it won't be, but you could. The options and the possibilities for a smaller down leg could exist. www.themarketsniper.com, book a call. We've been around for so long. We're still around. 14-day money back guarantee. There's cheaper options for learning the method, and you still get a Sunday webinar and our non-farm payrolls live trading day full time. So you will get there are a number of ways that you can engage with us, and you can be updated on this on a day-to-day basis. I do regular media updates to the community all the time, and we're looking at trades and some of these concepts that we're sharing you today, and on far greater level in terms of the technical analysis and other ideas. Okay, so that sell is a run of those two key levels, and then as whatever happens, if you flag, then you're going lower. And then we start looking at the interim. You might flag there. If you're flagging, you're going lower. You might have a longer flag here, and then have a final blow off, and you have made the 12.5. That's one scenario. It's not a call. And you have a bounce, then you have a W bottom, and then you could reverse there, or you could flag, and you could go and bounce all the way on the funnel. This is the barest scenario, the most negative scenario. And this will point to the head and shoulders on the NASDAQ probably performing with overperformance downside. A lot of assets will be going down. This will be a nasty Q3 period, and the Fed has already then done at least 2 of the 0.5% increases that are suggested. There's 3 to do, or if they've done the 3, this will be quite hard. That's a lot of liquidity being taken out of the markets. The bond market will be absolutely dying. A lot of things will be going on, and that will be quite a game. So you'll come all the way down into this funnel, and you're to say eventually support there. That would be super bearish. What are those levels? 8 or 10. So the first cup gold nuggets funnel is from the 8 to 10 range. If you were to run or put a foot below the 8,100, that would be very frightening, because it would open the door for possible further moves. So I wouldn't easily see that happen. I think it's a dark world, but I do think extreme cases are more probable than they have been before. That doesn't mean they're likely. It just means if you only put 0.1% on them, you might need to put 5 or 8 or 10% as a possibility, and sometimes even 15 or 20. And we can update that as we see how aggressively the Fed is responding, and they're going to make people suffer. I think this time, they're going to tighten, and the pips will squeak, and they're going to keep tightening. So I do think we're in the lower. There's plenty scope for being into potentially making these interim levels. So you've got a number of levels to watch out, but I do expect at minimum this to run. This, I would say, is high probability. It's my primary bias that this will be a break to the downside, and that 25k will be run. And then after that, whatever the number is, 23.9 on an extreme week, and then a bounce back, you'll have another rest pause period because of that, and then you'll be eyeing up the 18. If we got one calamitous event, though, and it can happen, if they did something, they tightened 2-3 times, and then banks started failing, and it just went full GFC. There's also no reason, the possibility. So a lot of possibilities exist, and isolating to one, you could have one capitulative event and run all the way down there in a single go. It's just not typical, and you're calling for an Armageddonist development. But all the risks are currently to the downside in our worldview, while the Fed policy is as it is. So the risk on policy will only come back once the Fed pivots, once they turn from their tightening. And this is something that's new to crypto guys, that they've not been hearing enough. So there's that. There's other things that are a little bit more positive technically that could be perceived. So let's talk about those, because somehow when I warn that it could go dark and we could go all the way down to the 8-10 range, you could go to the 12, you could go to the 15, you could go to the 18. That was the second interim, which I've taken off now. You could go sub the 25, which is this. Now, quite a few people got a little bit excited about the falling wedge possibility there. The problem is this is an inverted hammer, straight after a lot of hammering. And it's also a small, as we've already shown, flag in formation. So it's going to need to carry on and grind up to buy time to still be respecting this basing descending grind line. Like that ticks of the mozzies were biting me last night, scratching and itching. It feels like they were still biting me. So that could be a channel. The falling wedge option was possible at a point. Let's get out of log scale. Looks more possible on the regular scale. But you don't want to build too much confidence in that, especially given on the smaller time frames. This is looking like downside continuation. So, but it's possible. Now the falling wedge eventually sets up, potentially, but not always. We covered this in our non-farm live trading day. A bump to the upside, but it can also be what we refer to as a type 3. So there's not a universal contract. Its squeezing event means the volatility is constricting, and then you get an impulsive move. That's what it means. Generally, if it means constricting inside the constraints of a falling wedge, as we did here and here, in a bull market, you would expect continuation. In a bear market, on a macro basis, which is very news driven with a lot of downside possible calamities, you could be the probabilities improve for this to be a type 3, which would be something that would do that, for example. So don't put too much store in this. We need to see how the small time frame transpires. If we don't get the flag, which is the current threat for a down leg, if we don't get that flag, and it points to a possibility of a bump, you could do this move. That's our third impulse. So we have the big first impulse here, the second, which was that channel range, and then down. So even if we don't get the flag and we go to the other side, you can still have a new low and just end up with a bigger flag, and you can still do a stab through. And you can even do a stab through and then eventually break up, which we call a type 2, when you first break the lower line, just to trigger all the stops, which is what I call the order flow, chasing the bids and the asks and running everybody. which is common, and crypto is not protected from that in any level. And then you could get a move up. So that could see you still run the 18K, for example. You could come down with a wick level and run the interim 2. Certainly very possible to see the 23 at an extreme low in the run of the 25s and the first cup gold nugget targets. So these are all permutations, but a lot of people will get maybe a false optimism that the falling wedge is only an upward break. And we've got to remember that there's no contractual elements to it, and there are many circumstances when the macro context dictates the greater likelihood of what is called the type 3, the downside break, with continuation downside, not just the dip and type 2, which is the fake and break the way it's expected to break. So quite a lot to consume in that. For Bitcoin. Let's talk a bit and give Bitcoin a rest, and just remind you before we leave one more time on a lower time frame that this remains a flagging structure, and that is very grindy price behavior. And you've had a sell wave, nice little fake head and shoulders there. That went a little bit high. It's not quite a head and shoulders, so it's more a descending triangle. You've had one sell, you had a grind piece of price behavior, another sell, and now you're doing that. Now that doesn't mean it has to go down, but it can. From there, all inside, as I say, very, very flaggy, grindy, all hanging on the 30K. So you see how you hunt level to level down, and you go from key level to key level. And it's not only round numbers, it's also technically significant levels. And we've shown you those. The next being the 25 range, run to the downside, rallied through. And then that 30K or that 25K later will become the diagonal through some future continuation like that. So squeezing under that, very dangerous. Okay, that's your Bitcoin analysis. So on balance of probabilities, I see a run through the 25. That's where I'm at for the next range. So the visibility is better and higher probability when you have all the information for short term than it will be for long term, because you have to assume more things in the future when you look at long term. So now you understand a little bit more about what we're doing. Super quick for Hex, because I don't do individual videos just for Hex, but I have warned guys that have been in Hex that it's my suspicion you're going to run sub a cent. This funnel, each of the funnels have been run here. I'm again going to pivot to log scale here. This was the foundational upside HVF. Let's go. That's a big call, by the way, and it's a big call we've been making since 22 cents. And it's now 5.3. And you actually dipped at one point to 3.8. But this range here is basically 7.9 to 1.1. I actually bought at 7.9. So I was lucky. That's fractions of a cent. So that's less than 80% of a cent. And 1.1 is 1 cent. And a tenth of a cent down. That was all funnel ranges here, and I rode up, and it was very beneficial ride up. But this, and we're hunting but each of these funnels out, and we smash through them. I want to show you this on a smaller time frame, so I'm going to just go from the head and shoulders. So we don't need 5 day, we go 2 day. So. And I know many people are haters and many people are lovers, and please don't puke in the comment. I'm talking about something. Everything has technical analysis when there's money involved. You can say, oh, you can't do TA on a scam, and others will okay. Of course you can do on hexes in the scam. I'm not interested in that. Just look at the flow of money. You ran this funnel. We said if you run the funnel, no matter what you do afterwards, you're going to be breaking through. And people were like, yeah, that was a last chance. You could have still got out up top here. This was 22 cents, by the way. That's 23, I think, up top there. I might be wrong, actually, if I say that's 22. It doesn't look that accurate. Let's get that correctly. Yeah, it's 20, that high. You had a chance to get out, a second chance of 22. After a funnel run, bearish, you continue down. There it's supported, and you got to run. Came back down, that's bearish. Continuation. You broke it. But in that spill, you broke this. So we said it's going lower. You also broke this and got a rally. You're hunting out and clearing out all the upside funnels on the upside. So as bullish as I once was when we were setting up new funnels and taking the money, I've got literally a token amount of HEX. I've sold all of my HEX out just because I want to see how the snapshot works. Tiny amount of money. I do have Pulse Chain and Pulse X, so we'll see on the sacrifice how that does later. But those are different things. But this is terrible. This is terrible. We run this, and it looks like you're going to be going further down. To me, you keep hunting. This is a little continuation, by the way, to break a key level of significance. Now, who else has got this line drawn in? It's 5.34. Nobody. Look what a significant level it's been. And this is, you've run this, you're going to come on and you're going to go down through it. Another test, wind up. This is going to hold you down. You're going to get candle closes. Here, you got a snap. You didn't, on this time frame, the bodies were up top here. But the fact that the wick broke them, we're going to keep on keeping on. So down you come. And that's, it's not pretty, that. It's not pretty, I'm sorry. It's not pretty. And if you keep hunting those funnels, now you could bottom here, you could bottom, but if the cycle on Bitcoin is still to go to the the 15s, the 12s, and possibly the 8s and 10s, those lower halves. In other words, we have more pressure, capitulation. If you have forced sellers, people are going to end stake their 555s and just get out with anything they can, and they'll have just gone for a big journey. And I do fear, as a colorful character that's blinging at large, you can fall from grace hard. You can fall from grace kind of hard. So it would be good that if Pulse Chain at some time launches and does reasonably well, so that the people that got in with that can say, okay, E-Hex has gone down, but this is working all right. If the longer it doesn't launch, the more there's going to be a lot of folk kind of antsy, and people turn, and they turn mean on. So a little bit concerning for all our alts. We've said again, Crow, by the way, why is it consolidating around this level? It's also consolidating. So this is the beauty of the charts, clearing the face there. We called for Crow down here. We said it's down here. It's consolidating around a target. But our suspicion is, at some point, it will probe lower. At some point, it will probe lower. And it's amazing that it's also at its key level at the same point as Bitcoin is in a continuation at its key level. That is in and around the 30,000. And you can see that the 19, that's 19.2, the 19 level, is running kind of diagonal to diagonal here. Let's come up here. It could squeeze in there like that and go. Or it could visit all the way up to the other side and do a whole new and then go. It's all going to depend on what the chatter is on the Fed and all of that. So we throw it in Crow. We gave you this guy, Maker. As I say, you could have got in early around at 2.5 if you'd adhered to process, which I haven't done properly this time. Sometimes on your own calls you haven't even executed properly. And there's a big difference between trade execution versus what you see and what you call and what you actually do. There's a credibility gap in there, and sometimes you don't live up to your own credibility, and everybody does, even long-standing traders. So I say that to show some humility and to say it's okay if it's happened to you. You're not specially stupid. It's hard to do. It gets emotional when you're doing other things, and when it's hard to do, it's probably because you're too big. Reduce the size that you give zero sausages about it, and then you can leave it. And then suddenly it keeps doing what it's supposed to do. But we've called for sub $300 on this, and this is not bottoming behavior as far as we're concerned. Go to the daily. This looks like a very big descending triangle after some schizo volume action, price action. Look at that. And then a little bit so far. Well, this is very low vol and very close to the basing ascending grind line, which will be the thing that breaks, in our opinion. And think about what Bitcoin's likely to do. Now, Bitcoin is more stable, longer around, but if this is going from 1190 or 1150, don't forget it was up at 12, what did we call it at? 2.5. It's already half, more than half. It's more than halved, and it's going to go from here. Think what it means, if accurate. Obviously, it's an if accurate statement, to sub $300. You know, it's scary. You're going to trade 290 something. And the interesting thing is, when I did this was a community trade discovered. When I did the same TA on Maker versus BTC, I got a 0.01, a tenth of Bitcoin. So could go a lot further, because if Bitcoin slips to 25, that's $250, a tenth of Bitcoin. If Bitcoin slipped to 15, that's $150. So that's from a head and shoulder. So I'm going to delog that, rescale it, and drop a time frame. There. Double top, neckline down to 0.1. Inverted HUF made target, long period of scratching, still hanging out around here. Descending triangle, I think it goes lower. It's also been hanging out at a key level on Ethereum. So the other one we've spoken of bearishly was Elrond. I call it E-Gold. It confuses the hell out of me in the naming standards. It's so dyslexic. This one's lost all its drawings, but essentially the structure was here. Down, down, down she goes. $27 in our view. It's 76 at the moment. Super low vol. It's very worrisome, because it's usually just before a big move comes. So Elrond, Tezos we've also mentioned, but I mean there's quite a few that you could put, but these were in specific structures that met our criteria. Again, Tezos got it for a run sub $1, still at 1.9. Probably broken a broadening structure and just clinging on with a bit of a flag there. Grinding, very low vol with a mild grind. Double top resistance. Could it be an upside continuation like that? Well, that was kind of high. You'd need a strong up leg to 2.1 first. So you'd have to see, but otherwise this falls into the category overall of a broadening structure for us. Learn about broadening structures, how we what we conclude, themarketsniper.com. Only place you can engage. So under every crypto sniper, there's somebody who's going to make a comment, and then there's going to be 19 or 37 replies, all talking about Mrs. M. Lane really made me 9.7 Bitcoin. And then there's going to be a guy that has my picture and face and says, WhatsApp here, come and contact me now. Every single person that does that, we've tried to get YouTube to be honest and honorable, is a scammer and will steal your money and intends to steal your money. But YouTube doesn't care. YouTube doesn't care at all. They don't help us. The same formula, you could easily set an algo to keep these guys out. I do hate scammers, but that's what they are. Tezos Bitcoin, flat bottomed triangle, a lot of lean here. So what about we didn't do that Bitcoin dominance? We'll go back for it and we'll finish it. So Binance versus Sol. Now, Binance isn't popular. It's an exchange, and it'll go down when Bitcoin goes down, in my opinion. But if we just have a look at it, all things said, the Binance chain has to be deemed relative and next to Solana almost a relative success. It's low after the 64 Bitcoin pump. It's above its 64 collapse there from the head and shoulders of Bitcoin. Bitcoin 64, Bitcoin 69. So it never made a higher high. It's still above at a trading level. Yeah, it's trying to do this 45-degree thing now for me. Thank you so much. It's still above on a broadening pattern, which I do think will end up going down as well, because it's not going to be able to fight the downside. But this is a relative overperformance. Compare this to, split the screen, Solana. Going to remove that and put it also on now. So Solana was an overperformance runner at one point, and we were covering it extensively, but it's fallen hard. In terms of, this is a 2-day, yeah, it's a 2-day as well. Let's get these guys under each other. It's fallen on hard times. Let's get, whoops, Binance. Let's get our Binance token. Roughly under each other. So at this point, you had continued peak. Binance didn't go any higher. Solana was eating the dinner. 64k Bitcoin was, I think, Binance's high. Solana, whilst we had the falling wedge of Bitcoin, set up this structure and just blew up. Ran 260 here. Binance never made a new high. But Solana is giving back that extra fluff. If you compare it, it had overperformance, hyper overperformance. This was such a hyper overperformance, and there was a head and shoulder that can be argued to have triggered there. And it's deeply in percentage terms underperforming now. So it had an overperformance period that has been taken back very brutally. It's not one that I think you should hold during this period. Let's just get out of the split screen because it's kind of messy, and put on the Binance Sol chart for you. Sol Binance chart. Let's do it that way, because I think you can only do it that way around. And I think it's only Binance that does it. So during that period, you had extreme overperformance of Sol. We had an upside HVF that we called a scraggy, messy one. We made that target in an absolute blow-off of overperformance on the chain side. So Solana. you're now right down. This has been an awkward spill right the way down. Solana needs this funnel to hold. If you trade below 0.08 of a Binance token, it's going to become a properly second tier, third tier, fourth tier notion of chain. Very much so. If that happens, hard sell from the upper band down to the lower band. Hard sell. Very poor performance. And actually, who's benefited? Binance has shown relative strength. I want to just show you Binance against Bitcoin. It's actually holding up quite high. It looks a bit peaky now, and if Bitcoin sells off again, will come down, but hasn't run that low. Don't forget, Bitcoin has been dominant, BTCD. We'll look at that as well before we finish. So Binance is outperforming, really, as an alt. Binance ETH, you've got a reversal here. ETH DOM, and then bottoming, rounding, and heading up. That is a rounded bottom. So, no one loves Binance because it's a centralized exchange, and it's their token. But the chain, BSC chain, which the BNB token is on, you can't take anything away from what the charts don't lie. And if we look at Binance dominance, ignore those for a bit, they're not relevant. Binance dominance has been climbing, which is very much Binance against BTC largely. So other alts are losing ground to Binance. And ADA fans, there's a number of you, also been better than Sol. Terrible chart on the downside, yes. Not held up near as strong, but had a big blow off $3 there. If we have a look at ADA BTC, there are worse charts, but it's losing ground. ADA ETH, not yet the bottom that Binance has provided, but possibly going to start getting some benefit from the Solana death. If we go ADA Sol, or Sol ADA, is there a chart, Sol ADA? Seems not. Just Sol versus other fiat. ADA Sol, let's try ADA Sol. Unlikely. Yeah, we can't easily do it, but we can divide the one by the other. Let's go with the FTX chart. Again, a bit of an early sign of a reversal. So Sol had its huge hero period. No one can take it away. But I would argue that that's showing some degree of reversal as well. Beginning to show. And if we do the same for Binance Sol, I think we did BNB USD. Okay, we'll go with Binance, and then let's go with divide Sol. The reversal is complete, I would argue. Final spill, very much again a head and shoulder structure, and then boom, coming back up to that neckline. It may not be the time to put this trade on. This is late, by the way, because you might start to get a bit of a bid. You probably have some form of a target met down here. Remember, this is log scale, so it's not exactly the same, and you might be coming up to that neckline period. So you may get a bit of a run a little bit longer. The timing for this trade was earlier. I'm telling you about it now. But just for understanding, relative strength has not been with Sol. It's really dumped, and the outages clearly are starting to affect the token performance of relative to others inside an environment where crypto is heading down. Okay, so the final thing is we'll have a quick look at Bitcoin dominance, and that is, again, first and only guys to call this way back here in February. We were starting to warn. We've got the images. I've tweeted them out. We were saying, okay, made a high. How far will you dip here? There's a falling wedge coming. This is generally bearish for Bitcoin. I've shown you the YouTubes and previous ones. I don't want to do social proof. It pisses people off all the time. But there's always somebody that's saying, you never said that. You're just saying you said that. And it's not for ego. It's just a case of this is going up, and that's a bearish thing. Where are the key levels where it might get a rest? Well, there's some of them that were set on the way down. Here, these were resistance. And you've also got to take out this high here. I'm going to take this orange annotation off. So you've got a wick high there, I would say, 46, and then you're at the 50s. So it's 46 and 50. And you might get a rest at 47. You might pull back at 47, the roundabout the technical high here. But funny enough, that still means quite a bit more downside and overperformance, because it's actually to go from 46.8 to go to 47.8, 1%. Unfortunately, it's a lot of Bitcoin going down and the other coins going down more so for it to accumulate that 1%. So, you've seen this break. We warned of this break. That was your spiller with an absolute thriller. And it's a bear market. It's a bear market construct. So what you need this to do is to start getting resisted if you want the bull market to come back round about here. But there's a risk it might go higher. Might retrace to this cluster of levels here. Real cluster of levels here on the smaller time frame. We did this analysis when we were in the bull market, so that was some time ago, and you're talking about this time, in fact earlier, more than a year and a couple of months ago. So as long as this remains the case and it can walk out, let's have a look at it on a more detailed basis. It can walk out. It's limping forward, but it did here and then pushed. But the legs will get, the upsurges will get smaller, I think, as we get deeper. And this is a red candle. You could have some form of a pullback at some point. So there will eventually be some bids, but it can also be part led by Bitcoin having a bad spell as well, relative even to the alts. But generally that doesn't happen in bear markets. Generally it doesn't happen. So if you get a pullback, that will be a bit of relief. But you bled up here. This looked that's a top, you're going to go down. No, you went low vol and you went again. Oh, that's a top, you're going to go down. And look at this shooting star, you bled up, and you could go again. So this is something I wouldn't want to be the guy who calls the top on this one, because you're actually playing the Fed game. And so we turn to things like cross-reference multiples, so Bitcoin against the NASDAQ. And I did this on our live trading day in great detail. In fact, don't miss those. Say you want to know what it's like to be part of our community or check in with what we do, join the live trading day. It's $197 for one visit. Come on. If you can't do that, you shouldn't be in crypto. Decide if it's for you and join us. It's the first Friday of every month. And even self-studies will get that every time for the entire duration of the program, as well as the Sunday sessions as well, for interaction and questions. And I try, answer everybody's question. I don't like people to feel left behind. So what are we looking at here? Well, another grind line. Very sketchy grind line. And you've got a structure of this fat line, hard into a low with a snapback, a final high somewhere along these highs. So I'll carport that a whole lot. There, and now you're grinding. Well, for me, that's again that. And we need to see the moment. The bulls need Bitcoin to start to reverse here and to break up. It was a hard snapback there. It was fairly firm in bits there, but then it came pretty hard all the way back down, and now it's hanging heavy. So for now, I continue with continuation, and it's been going to the downside. But if we look at it on a bigger time frame, it needs to stand up at some point and start showing that it's going to go down less than the tech market. But that little structure suggests that we'll shed, my best guess, another move to the downside. As I said, we did a deep dive on this in the trading day. If you have a look at this on a weekly, or let's have a look at 3-day, we need this level to stand. This has a more believable falling wedge structure for now. We need this level to stand, and I think there's a chance that happens. But that doesn't mean it can't be going down. It just might be going down less than, could do something like that, less than tech. But tech might have a 30, another 15-20% to go down, and Bitcoin goes down 15%, 11 or 12%. That still means Bitcoin's going down in dollars, so that doesn't mean it's a buy. It just means the valuation rate is turning. This was the 64K. This was peak Bitcoin in relative valuation to the Nasdaq. Actually, when it did 69, it was less strong because it failed to make a new high against the Nasdaq. The Nasdaq was stronger. And since then, it's been re-rating down, re-rating to the downside, one impulse, two impulse. So it could do this, that, 3, and then it could break up. The fact that this is quite a flat, it's not too steep, gives me some encouragement. It does show that there's, relative to tech, if it goes down too much, some people are saying, well, it's cheap tech now. Lots of smart people, it's cheap tech. So if we sell off here, you can do a wick and bounce back in, and then go for a third impulse, and then you'll be relative overperformance. And in the long run, this will be a great trade, and it points to the bull market and the whole Fed pivot, and people will be making money again. So it will come, guys. Will come. It's a question of how far down. The only problem is if this level runs. If this level runs, then we're talking probably Bitcoin the 12, 15s, 8s and 9s. If this holds, the 25s and maybe 21s, that can still hold. So those are your two scenarios for various levels. Which probability do you give to both? Short time frame for me now, Bitcoin still down. That probably means tech still a little bit down too. It's then going to become a question of how much are they down versus each other for this. And it's been a less hard taskmaster than the dollar has, the tech, because it's in a bear market as well. Well, it's in a corrective market. Okay, that's it. It's quite a lengthy video. We appreciate likes and shares to keep putting them out. I haven't been putting a huge amount out on Crypto Sniper because there's not been the same level of engagement. If you give us shares, likes, and you want more, leave a comment and hit the likes. Wherever we're getting the high algorithm, for the algorithm of Schmoogle, wherever we are getting that, we are in a position where we are ready to do more material, and we get recognized, and the subs come up, and we appreciate that. I don't want to be nagging all the time. It helps us. So help us, help you. Okay, all the best, guys, and we'll catch you next time. Thank you for watching, and themarketsniper.com to be in the community to pick that bottom and which are the best relative strength tokens to be getting in. And we'll catch you next time. Thanks for watching. Bye.